Light is Britain's far-right conspiracy theory paper spreading hate and vicious lies. No, that's what the BBC say. The Light is the only national newspaper bringing you the real news and informed opinion on what's really going on today. You can subscribe, order copies, submit articles, and read back issues on our website, thelightpaper.co.uk, and see for yourself why the establishment are so worried about the uncensored truth getting out to people every month. The Light Paper. Not far right, just right so far. Thelightpaper.co.uk.
Scene script. Have you ever pondered the idea of financial independence and early retirement? The notion of not having to clock in at 9 or wrestle with the daily grind? Imagine a life where you're not shackled by financial obligations or a demanding job. It's not an impossible dream, but a reality for those who embrace the FIRE movement. That's financial independence, retire early. Consider the tale of Jane, a woman in her early 30s. Jane was an ordinary person living an ordinary life. She had a 9-to-5 job, a mortgage, car payments, and a lifestyle that was comfortable but hardly extravagant. And like most people, she dreamed of a life where she didn't have to worry about money. Jane decided to make a change. She began by cutting back on non-essential expenses, saving as much of her income as possible. She invested wisely, focusing on assets that generated passive income that didn't require her to trade time for money. Slowly but surely, Jane began to build her financial independence. She was still working, but she was no longer living paycheck to paycheck. She had a safety net, a cushion that gave her the freedom to make choices based on what she wanted, not what she needed. Fast forward 10 years, Jane, now in her early 40s, had achieved her goal. She was financially independent. She had enough passive income to cover her living expenses, and she no longer needed to work to survive. She was free to retire early, to spend her time as she pleased. Jane's story may seem extraordinary, but it's not unique. It's the story of anyone who has embraced the principles of the FIRE movement. It's a tale of discipline, of sacrifice, and of a relentless pursuit of financial independence. To summarize, the key points discussed today revolve around the idea of financial independence and early retirement. It requires discipline and sacrifice, cutting back on non-essential expenses and saving as much as possible. It involves investing wisely, focusing on assets that generate passive income. But most importantly, it requires a change in mindset. It's about seeing money not as a means to buy things, but as a tool to buy freedom. It's about understanding the true value of time and the freedom that comes with not having to trade it for money. This is the essence of the FIRE movement. It's not just about retiring early, it's about achieving financial independence, about gaining the freedom to live life on your own terms. Like Jane, you too can embrace the principles of the FIRE movement and embark on a journey towards financial independence and early retirement. After all, the only thing standing between you and your financial freedom is you.
Ever wondered how much you'd need to save to achieve financial independence? The answer lies within the mathematics of a concept known as FIRE, which stands for Financial Independence, Retire Early. The most essential number in your journey to financial independence is calculated by multiplying your annual spend by 25. Notice the emphasis on annual spend, not annual income. This calculation is based on the principle that you need £300 invested for every pound you wish to spend each month in passive income. Hence, your FIRE number is also your monthly spend times 300. This mathematical principle is founded on the 4% safe withdrawal rate, as defined by financial advisor William Bengen. He proposed this rate after analyzing the S&P 500, which typically produces an average of better than 10% growth per year when studied over a period of approximately 30 years. Bengen considered factors such as inflation and market volatility. After studying previous market activity, he concluded that a 4% rate of withdrawal per year would provide for a 30-year sustainable portfolio in the vast majority of cases. So to paint a clearer picture, if your monthly spend is £1,000, then your target for financial independence is 300 times 1,000, or £300,000. Alternatively, if your annual spend is £12,000, your financial independence target is 25 times 12,000, which also equates to £300,000. The first step in planning your financial independence, therefore, lies in understanding your monthly and yearly expenditure. Without this knowledge, it is impossible to take further strides towards your financial freedom. In summary, the mathematics of FIRE revolves around the principle of multiplying your annual spend by 25 or your monthly spend by 300 based on the 4% safe withdrawal rate. Knowing your monthly and annual spend is crucial in determining the amount you need to save to achieve financial independence. Armed with this knowledge, you can then plan your journey towards financial freedom. Remember, the journey to financial independence is not a sprint, but a marathon. Embrace the mathematics of FIRE and take the first step towards your financial independence today.
Good morning, guys. It is 11:43 on Monday, the 4th of November 2024, and that means we have completed, is it 2 years and 30 weeks, or 30, no, I think it's 31 weeks at this point, of what will be an 8-year FIRE journey. It occurred to me after I had ended the stream last week that I'd forgotten to actually have a look at the notifications on the account, so let's do that first thing. I don't think there was anything particularly noteworthy, but and sometimes, yeah, this doesn't seem to hold notifications really beyond sort of like the past week, whatever way it has changed. Obviously you can see the purchases and so on, but it doesn't give us the whole history there. Nevertheless, new notifications then. So last couple of days, Amazon pops 7% on strong earnings and robust cloud and advertising growth. Atlassian, I think that is, surges 16% after Q3 earnings beat, driven by increased cloud software demand. And it says at the top here, team delivers. I don't know why or what the connection is there. Oh, maybe that's the ticker. Intel up 6% as upbeat outlook signals potential stabilization amid restructuring efforts. DJT dives. Trump media drops 12% as Harris gains in polls days before the election. I really wouldn't read too much into that. As far as I've seen recently, it appears to be very much neck and neck, and the election could, from what I've seen, it could be decided on the basis of who is able to mobilise their electorate more so than any other factor. Biggest stocks before earnings: Franklin Resources, Berkshire Hathaway, that's Warren Buffett's company, I think, BioNTech, Marriott International, and Constellation Energy. So that is a look at the notifications. And while it is in mind, I'll just mention the fact that there are affiliate links in the description for the video. One of them is for Trading 212, obviously, because that's the platform that we are using here. And the Trading 212 one is only valid for another 3 days. But they run these promotions every so often, every couple of months, every few months. So I would suggest, if you're not sure that investing is for you, if you haven't done your homework yet and you haven't decided that you like the Trading 212 offer better than other similar offers, I wouldn't be encouraging you to make use of that affiliate link. Go away and do your research, do your homework, and if you do, after doing that, if you realise actually Trading 212 is the place for me, and you're willing to wait for another promotion to come up, then I would say do that. And if you do sign up using the affiliate link, the wording of the T's and C's, if you like, is something along the lines of that you will receive free shares up to the value of £100, and so will I, if you fulfill the conditions of the offer. I think it's worth pointing out that it's up to £100 in value. There's no guarantee that you're going to get as close as that or anything like that sort of amount out of it. You could, but that's probably less likely. So the other offer, the other affiliate link in the description is for Monzo, and what that said, here's an ad about Monzo.
I want a bank that makes money easy.
That sounds perfectly reasonable.
And you are?
We're a bank called Monzo.
Oh.
I want a bank that shows me what I spend instantly.
No problem, just give us a go. See?
Can you make splitting bills easy?
Super easy, check this out.
But it's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on.
Can I talk to a real person 24/7?
Of course.
Even now?
Yep.
Even now?
Anytime.
Can you tell me when I'm running a little low on cash?
We certainly can.
Cool. Can I afford these?
You certainly can't, sorry. Can't afford that either.
That's a real shame.
Not really. Time's up, how'd you get on?
It's a draw.
Can you help me save for my next holiday?
Oh, how about you set up a savings pot in the Monzo app called Barbados, baby?
Thanks for listening, Monzo.
We're all ears.
We can go now.
Rude. You make Monzo Monzo.
Okay, I suppose really what I should say is I am not affiliated to Monzo other than I have an account with them. Anybody that has an account with them can find their affiliate link through the app, and Monzo is the account that I use the most. That's my current account. It's the account that I use to fund my Trading 212 account. And I like it because, as far as I can see, transfers made through it are instantaneous and even internationally. So it's very useful from that point of view, at least from my perspective. So if you use the affiliate link for Monzo, you will receive, I think, £5 they say, and so would I. Again, you have to follow the conditions. You have to open an account. I think you have to fund the account and make a payment all within 30 days or something like that. But it's not a, there's no risk, I suppose, with Monzo. It's not an investing opportunity as such. I think you can invest within the app. I haven't given that serious consideration to date. But that's something that you might choose to have a look at yourself, I suppose, in due course. Let's come to the market. Current market value, 83.91, near enough 92, down almost 0.5% today. and that isn't really a surprise given the meteoric rise that we had seen of late, and I'm pretty sure I did predict either a bit of a pullback or a correction of sorts, although it has to be pointed out that the US market doesn't open until 2:30, and it's always unclear until it opens what way things are actually going to go for the day, although that looks like a fairly strong indicator that it's probably downwards. Let me just click into the notifications here, the only reason being that I saw a little dot there. Okay, so the little dot is for social. Let's just take a quick look just to see. Okay, so that is that's basically users having their say there, and I don't think I want to spend too much time looking at that, just from the point of view that you never really know whenever you see a username how experienced somebody is, how knowledgeable they are, how much research they have done, how old they are even. I'm pretty sure you have to be 18 to trade, but nevertheless, I'm just a little bit wary of giving too much credit to users, just random usernames. I mean, by all means, I'm not suggesting that you shouldn't read them yourself and consider what they say. But I wouldn't promote it any more than that. So currently, as things stand, we have 237.6 shares. That is currently worth 19,940 odd. So of course, that is a lower figure than this would have been last time I did a live stream, and that's quite simply because of the slight dip in the market, which has brought things below the previous purchase price, which I can go back and have a look at. So yeah, previous purchase price was 85.08, and now we're at 83.91. So in the meantime, the price has dropped a little over £1, and that explains why the portfolio value has dropped below 20,000 again. It will of course come back over it once we put in our weekly investment, but I thought it was worth just pointing that out. It's normal for your portfolio value to fluctuate, and believe it or not, the more money you have in, the more the actual sort of monetary fluctuation will be. Think about it this way: if you had only £200 invested and there was a 1% change, well, that represents £2. So, you're depending on whether it goes plus or minus, your £200 is either going to become 198 or 202. On the other hand, if you have 200,000 invested, then a 1% change is going to be, is it £200? I would nearly need to write it down to figure out where the zero goes, but it's a magnified order of things. That's basically what I'm trying to say. So slight variations in price actually have quite a big effect on your portfolio value. I think that is part of the benefit of kind of being able to invest gradually over a period of time, because you'll see the fluctuations for yourself and you'll kind of realize that's okay. It's normal. It's part of it, and those fluctuations are nothing to worry about. They are completely normal. Moving on down then, if we look at our return, despite the fact that we are below 20,000 in portfolio value again, and the price has dropped and we're down 0.5% now today. The return on investment is 23%, not to be sniffed at. And as you can see, the average purchase price currently sitting at 68.18. I expect that will go up to about, recently it seems to be about 10p of a difference. So I think that'll probably go to 68.28, but keep an eye on it to see if I'm right. Let's go ahead with that said and go and buy our weekly £120 worth of shares in the S&P 500 exchange traded fund, this one from Vanguard. That's going to buy us roughly 1.4 shares today. It's going to be a market buy, so I'm not putting any limits or anything like that. It's just going to execute at whatever fair value appears to be at the time. So current price there, if you can just about see it, 83.87. Let's send it through, see what we get. So we got a trade at 83.86. And we did get 1.43 shares, and as predicted, the average purchase price has gone up to 68.28, and our return on investment has it appears to have diminished very slightly, but it's just due to dollar cost averaging, so now just very slightly below 23%. And I don't think there's really much more to say today. That is the height of it. That's the position so far. Consistency is key, and I follow, in terms of the stock side of things, I follow the J.L. Collins methodology, where you just keep investing and let the stock market work its magic. So there you go. Yeah, so with the time nearly at 12 o'clock, I will take my leave. Thank you for watching. If you have been, if you find this interesting, why not subscribe to the channel? And if you particularly liked this episode, feel free to give it a thumbs up. And other than that, guys, I will be back next week with more. Have a great end to your day, and thanks for watching once again.